everybody, and good afternoon. I'm Lauren Simonetti in for Charles Payne, and this is Making Money. Look, after yesterday's tech tumble, we've got a rebound with healthcare rising to record highs on news of a promising cancer treatment from Moderna and Merck. Let's take a look. The S&P 500 at 7,715. It is up a third of 1%. The NASDAQ, the tech-heavy NASDAQ, still in the green. It's up 51 points, and the Russell 2000 is higher by half of 1%. We have bond yields plunging after the U.S. Treasury's surprise announcement to double its buybacks of longer-term government debt. You can see the 30-year, well, it's dead. I think that's the wrong quote there. Those are the wrong quotes, my friends. And the Fed minutes are out for July. Moments ago, we are going to get live reaction from Danielle DiMartino Booth in just a few minutes. But first, we have Barbara Doran, BD8 Capital Partners founder and CEO. Barbara, welcome. Nice to see you. What are you making of this action in the stock market and in the bond market today?
Yeah, the bond market's interesting because the bond market, the yields have been going higher and higher. The 5-year was close to the 30-year was close to a 19-year high.
Yeah, 5.3%.
Yeah, exactly. And you're looking at the 10-year, which of course mortgage rates are tied to, creeping up. So this is a nice surprise. You know, that's why we've seen the market take off. It's brought yields down. And the question is why they're doing it. Is it a rate cut? I mean, that's what, it can be viewed as. So, but whatever, it's good news for both bonds and stocks.
Do you view it as a rate cut? And do you think it will have a long-term impact, or this just a Band-Aid? Are we solving that are we trying to not fix the problem? We're just treating the symptoms? We're not going straight to the source?
Yeah, Lauren, that's the right question, because it's really, I think, about the deficit, which has just exploded. Unless that starts to come down, we're going to have that long-term problem. So this is sort of a Band-Aid, but you've seen anemic demand in the longer rated bonds since June, the longer duration, and probably part of that is the crowding out from CapEx debt raising.
Yeah, and there's the Treasury yield coming down 7.7 basis points today at 5.2%. I teased this in the intro to the show. The healthcare news today. I mean, you have Merck up double digits on news of a successful late-stage trial for a melanoma vaccine with Moderna. You like Merck long-term here, but to me, this sounds like the new AI play with healthcare stocks surging, and I don't think AI had anything to do with this drug discovery.
No, I don't think so. It may be helping on the margin. I'm sure everybody's trying to incorporate it, but to me, this is a moment like when you had Eli Lilly and the GLP drugs and the breakthrough in weight loss, because you knew how massive the market was. And here you've got cancer. Moderna has 8 other trials going on for other types of cancer. The lung cancer, small cell, is in phase 3. So this could become a platform, for all cancer therapies. So it's not just about melanoma. It's extremely exciting because it's going to take your DNA, the DNA from your tumor, and it's going to treat your immune system to go after that.
Customizable medicine.
Yes.
Moderna stock is more than doubling on that news. Is that an overreaction?
Probably not.
Wow.
I mean, it doesn't mean it can't come in, because it's everything, short term goes ahead of itself because these things will take time. But longer run, that Moderna and Merck, who is also up strongly today, long run probably will be core holdings.
I mentioned AI earlier because when AI and eventually quantum computing helps with drug discovery, just think of the potential for biotechs.
Yeah.
They will be the new AI trade.
Yeah, they will be.
Yeah. Let's talk about Amazon. They're set to expand their drone delivery service to nearly 500 cities, aiming to make 1 million deliveries this year. Should you get into Amazon at these levels here?
Well, it's an interesting question because Amazon is not exactly undiscovered, and the stock has done well. It's a little bit off its high, but not much. And the question is whether there could be P expansion here, because when you saw their report late July, they blew away the numbers in AWS. People expected up 30%. It was up 37%. Also, advertising was up strongly, and those are 2 of their big growth engines and higher margin. And the logistics you mentioned about the drones, they in May opened up their entire logistics system to outsiders, and that is a $1.3 trillion market. So they don't have to gain much share there to really start to add to their bottom line. And I don't see a lot of focus, on that. But I think this is yet another growth engine for Amazon, which means I think the PE, which is about 27 times next year's earning, a little bit less than historically, I think you can see expansion.
People say Apple's a value stock, not a growth stock. Would you put Amazon in that category?
No,
Not
No,
yet.
because their revenues that came in were up 20% overall.
Yeah, yeah. And you say investors should buy the dip on Broadcom. This is an NVIDIA rival, and the news today, one of the reasons why Broadcom shares are down so sharply today is because their rival Marvell has a deal with Google.
Yeah, that is their biggest customer. So the stock should have had a reaction, but the stock had already been down a lot after their earnings in June. They report again in September because they did not raise guidance enough. You're talking about a $100 billion run rate next year, and they are also second to NVIDIA, customizable chips, networking, the stock. And with the AI, we continue to see the demand growing, CapEx growing, so they will be a beneficiary. And Google is still, they are very tied into Google and their TPUs. So Marvel, I would suspect, we don't know this yet, but Google is probably expanding and just diversifying their supply chain because they have that demand.
Yeah, and it's hard to get the chips.
Yes.
And NVIDIA can't be the supplier to the world. Barbara, thank you.